Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it relentless because that's exactly what this market has been. It doesn't matter what index you look at, they continue to push to the upside. We're going to take a look at the NDX, with Nasdaq 100 index, and the Russell 2000 IWM, which is the ETF for the Russell 2000. Look at a couple of key indicators that I look at every day. And then check in on what's happening with gold and GDX, the gold miners. Boy, I tell you, gold looks like it is prime to explode. We'll see. It's faked us out before. But first, let's start off here with the side-by-side view. The Dow Industrials were down 44 points on the week. A little doji, well, not quite a doji candle, but it definitely is a little pause type candle in here for the week. And when you take a look at the SPX, up 48 points, clearly closing above the range of the prior week and closing at a new all-time weekly high. The NDX was up, let's see, 365 points, and similar to the SPX, closing above the range of the prior week, closing at a new all-time high. A continued strong push. Now, not really seeing divergence on RSI, maybe a tiny bit on DI+. Very little here on RSI, but, it can easily disappear the way this thing's trending. These things are very, very strong in trending mode. I mean, look at the ADX. Just going straight up. Of course, you don't need to look at the ADX to see this when you look at the moving averages and what it's doing. Very, very strong trending, of course. Take a look at the industrials and the transports. So the industrials down 44, transports down 88. Now, it still looks to me like the industrials are leading to the upside and the transports are playing a little catch up, and they need to take out this July high of last year to get back in sync with what's going on with the Dow Industrials. Okay, let's take a look at the NDX. Okay, here we go. Up 259 points on Friday. Pretty good pop. It started on Thursday and then just exploded up for the week. So up 259 on Friday, 365 for the week. So a good portion of that ended up occurring right on Friday. Now, I'm looking at this wave count, and let me just focus on the, and let me get this out of the way because this doesn't update on the weekend. Okay, I should have cleaned that up earlier. And let me move this over. So here's the count that we're working. We're working this large flat that's underway right now. But I've talked about this before, and I pretty much have this on all the major indices. If they push above the 138.2% level, and we're talking about B versus A, okay, this large flat, A, B, C. We push above 138. That I'm going to be focusing a lot more on my alternate count. And I kind of referenced the alternate count with my last video 2 weeks ago. And I talked about, the bigger, much stronger, more bullish alternate count. I'm just not willing to go there just yet. We're getting close because of the way the price action is. But so far, right now, this pattern that we've got in here is still very, very valid. And going above 138.2, let's just be clear, it doesn't invalidate that being a B wave. It can go all the way up to 161.8, but it increases the odds that something else is going on, okay? So that's why we get above 138. I'm going to be moving on all the indices to the alternate count, okay? And the alternate count, as I said, is much more bullish, okay? So let's take a look at this, and it has stronger bullish implications over the next several years. Okay, so here's the NDX on the daily. So here's what I'm looking at with this ABC within the Y corrective wave, okay? And a 5-wave A, a little B wave pullback, and then I'm looking for 5 ways to continue to flesh out here. And, right now it looks like it wants to continue and give us that. So we'll see if we get that. It is pushing in here after the pullback. Let's see this pullback to, let me zoom in a little bit. This pulled back to an RSI of 46.9. So just 47 on the RSI, not very deep. This pullback on the B wave was all the way back to about 40, 39.9. Okay, so right now, continuing to look for this to play out, and we'll see what it gives us, especially over the next week or so. Okay, let's take a look at IWM, which is very interesting. Okay, IWM continued its push during the week, and it was up 216 on Friday. Look at the big move it made on Thursday. Gapped all the way up here and then pulled back. And then we just continued to push and push to a new intraday high in here on the week. And I think, yeah, and for the year. Now, when you look at it over here on the weekly, here's up 6 points for the week. Now, this is interesting. You see these fan lines in here? The fact that we continue to break these and then push, and the way we pulled back in here, sometimes deeper, but we pulled back here on January 12th, the week of January, I guess it was the week of January 14th, and now we're pushing again. So it's going to be really interesting to see how far do we get. It looks like the next potential resistance, I would say, maybe is right in here, around 212, but there's also a pretty good chance it's going to run a lot more than that. It looks like we're kind of getting a little bit of a swing move in here. I mean, you could almost make the case that this is a little bit of a cup and handle kind of thing. You know, this little bit of a cup and handle kind of move. We'll see what plays out. When I take a look at the Elliott wave picture that we've got, here's what I've got. Okay, I think we're in a big corrective ABC pattern. We'll see how big the C wave gets, but first we got to get a B wave done. So right now I'm looking at this ABC, C versus A. I'm looking at where could C end, and well, C equals A right up in here. I need to get this lined up again with the C wave. Come on, there we go. So C equals A at 231, okay? And so that puts it all the way back up into this area if we continue to push. So right now what we're doing is monitoring, the C wave and looking to see what do we get. It looks to me like we're getting an impulse wave structure moving higher in here, but it could also be, because all this overlap activity is going on, that we have some kind of ending diagonal pattern that could be forming also. But right now, I'm leaning into the impulse pattern. We'll see if it holds. Okay, that is the picture that we've got on IWM. And let's take a look at a couple of indicators. I want to look at the VIX first. I know a lot of you guys look at the VIX, a very popular indicator. Let's just pull it up. And what is it telling us? I mean, it was down 29 cents on Friday, down 64 cents on the week. And yeah, I mean, it just continues. Here we are now, back below the 10-day moving average for several days in a row. Actually, it's been what, 2, 4, 6 days in a row. And we've got the moving average crossing again back down to the downside. But where are we sitting? We're sitting at 1311. We're back down into the basement here. It took a long time to break out of to break down below this huge range. February 13th, that was CPI day, I believe. That was a Tuesday. And then, we'd been just oscillating inside that range for quite a while. And then here this last week, we broke down below it. So this doesn't seem to be going anywhere fast whatsoever. What's the picture? There's no fear in the market right now, and there's a lot of calm. Everybody's just like, hey, we got this thing is trending. No problemo. Well, we'll see how long it lasts. Let's take a look at the high yield bond fund. Now, this is giving an interesting picture because look at the pullback that occurred on Friday. It was down 15 cents, but it opened all the way down here and on a low came right down to this trend line that I had drawn several days before this for the members to show this little trend line, because we broke out of it here, broke the trend line to the upside on the 22nd. and it kind of just oscillated around a little bit for several days. Then we got this major pullback down here. But the thing that's most interesting to me about HYG is this picture right here. So when you look at the weekly, we've broken this longer term trend line all the way back into 22, August of 22, okay? And then now this looks like a bull flag to me. I mean, it just, flagpole, a bull flag. And if that's the case, what does it imply? It implies another move like this. And if we get that, that basically is telling you risk on. That tells you the market's saying, yeah, we're going for it. We're going to continue pushing. We'll see. But that's what I'm seeing in here. We'll see if that develops or not. So that's the picture that's going on here on HYG. Let's take a look at gold because that has gotten really interesting. Okay, GLD was up 358 on Friday. Huge move. Well, actually, if you combine it on Thursday and Friday, big move because it closed Wednesday at 188.34. And here we are sitting at 192.89. Big move. Volume kicked in very nicely. This red line, I believe we've got the, that's a 20-day simple moving average of the volume. And here on Friday, the 20-day is sitting at 6.1 million, and the volume on Friday was 13.4 million. So over twice the 20-day average volume in here. Big, big move. Now that's happened before. Big volume right here on a big move. Here's the weekly view, 427. But the most interesting thing is when I go to the Elliott wave picture, let's just go to the weekly. You go back to the high in 2020, and then the high that occurred in 22, and you say, well, I've created this little zone in here between those two peaks. And we came right to the bottom of it on the week of December 24th. And we pulled back, and now here we are again. But this just looks really, really interesting because of the way we have what looks to me like broken out of a completed zigzag wave 2 pullback in here. And now we've broken that trend line, which all occurred on Friday. And on Thursday, it was really interesting. I mean, when I talked to the members, I said, look, I had drawn this trend line, and this went literally right to it, intraday high. And then it just paused. And then the explosion on Friday, and then here we are. I think we get a close above this band, what's the high end of the band? We're like 194.50. We get a close above that level, and I think this is just going to really turn on the afterjets. I think it's going to go. It's going to be in this third intermediate wave, and it's finally going to start accelerating. It'll be in a third of the fifth primary wave. So let's take a look at GDX. Let me go back to the moving average view, and then I'm going to look at kind of an overlay of the two of them. So when I look at GDX, here's the weekly view. So remember those peaks I just talked about with gold? Well, with gold, we had where this 2020, and then we had this 22, and it was all the way up close to that peak. And then we had, another rally back up in here. This index, the GDX, the ETF, just has not tried to mirror gold at all yet. So we had a nice move this week, up 67 cents. I like the way it looks in terms of a kind of a bullish engulfing type candle. But it's really going to have to turn on the jets to break these trend lines and catch up with gold. Now, it may very well be that gold, because if it breaks out to the upside like that this is really going to kick in then. Okay, so that's the picture of what's going on with the gold miners. And I know there's multiple different, there's JDXJ, there's JNUG, the nuggets, and all of that. But I'm just going to look at GDX today. Let me go back over here and go to GLD again, and then show you this. So here's the overlay of I don't know, red line, orangish red or whatever. I'm partially colorblind. So that's GDX right here. And then this is GLD. So you could see the lag. But you see how a lot of times they are in sync. And here you pushed a higher high on GDX, pushed a higher high on gold. But then it just hasn't done it with this push right here that occurred in December. We didn't push up like GLD did. So it's going to be interesting. We break up and break through that resistance band. This could really take off in a catch-up mode. Okay, that is it for today. We'll see how this plays out. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the YouTube channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website. Check out the membership. Everyone have a great week. We'll talk to you on the next video.